Hello traders and welcome to another video review. Today is Thursday, June 11, 2026. Let's take a look at the Forex economic calendar for today. So what do we have here? The most important thing is that today we have the ECB interest rate decision scheduled for release at 2:15 together with the deposit facility rate. The market participants expect the ECB to hike the interest rate from 2.15 to 2.40 and hike the deposit facility rate from 2% to 2.25. So please stay focused, stay vigilant around 2:30. 15 minutes later, we got the PPI data from the USA and the initial jobless claims are scheduled for release as well. 15 minutes later, we got the ECB press conference, and please remember that the questions asked at the press conference might be very, very interesting for the, let's say, swing traders or the macro traders as usual, and they make increase they might increase the volatility as well. Sometimes the volatility is bigger than during the press conference than during the initial interest rate decision itself. Okay, so we know that it is a busy day later on, so let's take a look at the charts. We start with euro dollar, obviously. So the euro dollar 4-hour time frame chart is definitely going nowhere. Is locked between the 1.1501 and 1.1579 technical resistance, just in the middle of the range, with the momentum slightly below the level of 50 as the market participants await the interest rate decision later on. So the volatility right now is very, very low. Range is clearly defined and we are waiting for the breakout after the decision is made, either to the upside or to the downside. However, please notice that sometimes not this decision itself is very important. The important is how the market will react on the decision. It might be good news and market reacts the other way, and so on. So please stay focused, stay vigilant during the interest rate decision today. Cable breaks above the level of 1.3408. Local high was established at 1.3422, but look at this big pin bar here. So definitely bears are defending this zone, and during the first movement to the upside there was a bearish engulfing pattern. Then we have the first pin bar, second pin bar confirmation. So bears are actively selling into the buying pressure, and if the bulls wants to move higher, definitely they need to break now above 1.3422. Momentum roughly oscillating around the level of 50. We are waiting for the final conclusion about who is going to win this internal battle. So let me just leave it like this. US dollar versus the Japanese yen is entering the supply zone on a 4-hour time frame chart, just as expected. Local high was made at 160.60. Next target 160.73, only 13 pips away from the swing high of the April swing high. So please take a look at this and please consider the situation as a very, very interesting, because we might see very, very clear reaction from the level of from the levels above the 160, just like the last time. What the bulls need is a big, nice breakout way above 161, 162 in order to confirm this movement here to the upside that lasted almost 1 month. Didn't actually went for nothing. Okay, gold. Well, gold definitely hits the blue trend line. What is the blue trend line? This is not a trend line. Apparently it looks like a trend line. Look at this. Yes, it is some sort of the trend line, but it's just showing us the movement to the downside as the wave Y of the overall WXY complex corrective pattern evolves lower. So what we got here is a hit of this accidental trend line and movement to the upside. Local low $4,023. So we broke below the lows of the wave W. So officially there is no problem for the wave Y to be completed here, or from the technical point of view it would be okay to to move higher. Extremely oversold conditions that has not been seen since the wave W was made. The low for the wave W was made in March 23rd, and from that lows we went as high as 4,847. Okay, so maybe it is a time for the gold to bounce higher. All right, so please keep an eye on the current situation on gold. Very oversold conditions on 4-hour time frame chart. Let's look at the daily, and extremely oversold conditions on daily, more during the W wave low. I haven't seen this in years. Look at this. Look at this. This is 2024, and it's still higher than this oversold. Look at this. Look at this. I don't have any more data here. It's December 15, 2023, and still the RSI is higher than this one. So this is historical low for the gold on daily time frame chart according to this data. So that's another situation here. That's another clue from the market that you might want to consider in your analysis. Now, S&P 500, big movement to the downside as the on the daily time frame chart, as the movement as the bears take the control. We got the bullish divergence. Now the bullish divergence, as you can see, is actually moving towards another day. We have a new low, 7,224, but it's a marginal new low. So we should see some sort of the relief rally soon on the S&P 500. Nevertheless, the market continues to develop the biggest correction during this up cycle. Look at this. This is definitely the biggest correction during this up cycle. We might even, you know what, we might even apply the Fibonacci retracement tool here, so we can see how much did we retrace and where are the levels. Okay, so this is the one level. Let me just place it, let's say here. It's not important to have it to the pip. 38% is just around is roughly around 7,122. 50% is around 6,967, and 61% Fibonacci retracement of the last swing to the upside is located roughly around 6,813. So those are the levels for the S&P 500 retracement. So corrective cycle on S&P 500. Crude oil doesn't do anything. It jumps around the level of 50. It spends more time below the level of 50. Nevertheless, it still can be seen that it is moving up and down. So right now, all of these levels that we indicated at the beginning of the week are still in charge. Maybe this one is no longer necessary. So we are, after filling the gap, we are just bouncing up and down. No major moves here. Bitcoin hits the trend line, 59,130, consolidates a little bit while the momentum moves from the extremely oversold conditions towards the level of 50, pulls back. Now it's above the level of 50, but still we need a movement above $65,000 in order to continue higher, some sort of the pullback. So right now, very interesting situation. However, I doubt that the movement to the downside had been completed for good, and now we can only see the uptrend. No such a thing here from the technical analysis is being indicated by various scenarios. Most likely this movement to the downside, despite the extremely oversold conditions, will continue. Nevertheless, the consolidation phase or something like, you know, kind of a complex correction to the upside might take a lot of time. Look at this. This one took months. This one took like 3 months to complete, right? First, vicious movement from the all-time high, and then a few weeks of the correction, almost 1 month, vicious movement to the downside, then another correction to the upside that took at least 3 months. Vicious movement to the downside. Guess the next step, guess the next pattern that is being printed by the markets, right? So we need to do something like V-shaped reversal, big movement to the upside in order to break this pattern and establish a new one. what the Bitcoin bulls needs is a very, very strong conviction that the situation might take place and you know, make sense in the current economical and global macro situation. For now, there is no such a thing all around the board, and this situation here that is being built might be just another up and down, whipsaw, choppy trading conditions for another, I don't know, days, weeks, or even months, as you can see, before the Bitcoin will return to the multi-year up trend, because this is still the global big trend in the background. But it doesn't actually look like the movement to the downside is definitely 100% over. No, it looks more like a pause, like a pullback, because of the extremely oversold market conditions. So now it's time to retrace some ground, and then we will see what will happen. Remember, two bearish F patterns, bearish flag patterns in the background, straight down from the all-time high, are still being present on the screen and on the charts. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.